Hi everyone, my name is Faith. I'm your go-to lender when it comes to all things mortgage. Again, I'm licensed in 5 states, that is Texas, Missouri, Pennsylvania, Kansas, and Georgia. Today, I'm going to be talking about self-employed borrowers. The reason I decided to tackle this topic is because I see the frustrations of so many people when they come to me, they apply for the mortgage loan and they cannot qualify. And some of them have to wait for another year. Some of them have to wait actually for 2 years just for them to get pre-approved for a mortgage loan. If you're self-employed, you file your taxes in, I think, 4 different ways. Number one, you either file it as a 1040 Schedule C, or you file it as an S-Corp return, which is 1120S. You can file it as a C-Corp return, which is 1120, or maybe if you're in partnership with someone, you file a 1065 return, which is a partnership return. For both 1065 and 1120S, which is the S-Corp and partnership, you generate something called a K1 on those returns, and that K1 flows to your personal. Now, let's talk a little bit about the Schedule C, because majority of the people I get to deal with, it's either they have Schedule C returns, or they have S-Corp returns, or they have the C-Corp, or even 1065 returns. Now, I'm going to talk a little bit about the Schedule C. When it comes to Schedule C, for example, if you're being confused, what is a Schedule C? Who files a Schedule C? If you're paid with a 1099, it means your 1040 return or your taxes have a schedule, which is a Schedule C, which is basically just the profit and loss from the business page. Now, the Schedule C is divided into 2 parts. That is Part 1 and Part 2. Part 1 generally just lists the gross sales or how much you made. So if you have a 1099, for example, and that 1099 has 100,000 on it, that 100,000 is going to go to Part 1 of the Schedule C. Part 2 is the expenses, which is from number 8, all the way to number 27B. So that one just gives you a list of expenses that you can list. Whatever expenses are associated with whatever kind of business you're doing, you can list them on Part 2. Now, what do we look at? There are different line items or numbers that I look at when it comes to Schedule C. Schedule C has number 1 to number 31, or line item number 1 to line item number 31. I'm mostly interested in line 31, which is the net income. So I'm not looking at how much you made for the gross. I'm looking at what did you report after expenses. Again, I'm interested to see if there's anything on line 13. Line 13 is the depreciation. If you have an asset for a business, especially people who own trucks, depending on when you bought it, you can be able to depreciate it. And because depreciation is a non-cash expense, it's an expense to you, but for me, I'm going to add it back. So it's an advantage on your end if you have depreciation. I'm also looking on a number that most people miss out on, or actually some people get affected on this because they do not know. And even people filing taxes, they actually do not know this. When it comes to mortgage, you're also looking at, did you report anything on line 24B on your Schedule C? 24B is the deductible meals. So if you have anything on 24B, the deductible meals, we're going to subtract it again from line 31. Now, if you have meals or you want to claim meals on your taxes, instead of putting them on the deductible meals on 24B, just put them on the next page under other expenses. We're also looking at, there's a page just after the Schedule C page, which lists, the mileage if you have any business miles. So if you have any business miles, we take back 26 cents per mile for 2024, and that is the depreciation for the mileage. So if you have any business miles also is an advantage to you because it's an expense to you, but I'm gonna add part of it back. So for 2024, we are taking 26 cents per mile. For 2023, it was 25 cents per mile. For 2022, it was 23 cents per mile. So it kind of like goes, it's a cent every year. So I'm expecting 2025, I'm expecting us to depreciate at least 27 cents per mile. So that's for the Schedule C. Again, when it comes to business returns, we look at 2 most recent years of taxes. But this is the thing, if you've been on the same line of business, for example, you've been on tracking for the last 5 years, you can actually get away with only the most recent 1 year of taxes. We just need to prove that you have been on the same line of business for 5 years and also go conventional. FHA do not take 1 year business returns. And I don't want to talk about the different loan programs today. That's another video for another day. Now, for people who have S-Corp or 1065, you have something called a K1 on that return. The K1, we look at the ordinary business income. So we look at that number And then we also look on line 16 if you have any distributions. How do I know if you have any distribution? I'm just going to look on line 16 on the K1. If there is the code D, then I know there was a distribution. If there's no distribution on on the K1 on the S-Corp or 1065, then I have to look at the cash flow for the business for the last 3 months. Again, I do offer free consultations for all business owners. If you're my client, I give you that extra advantage of offering free business consultation even before you file your taxes. Again, you can reach me on 469-761-2734. My motto always stands as helping homeowners achieve home ownership dreams, one home at a time. Again, my name is Faith. You can reach me on 469-761-2734 or any of my social media platforms. If you're on Facebook, please follow my page, Faith Kiunga Lending. I'm also on Instagram. I'm on TikTok. There are many avenues you can reach me on, and I'm here and glad to help you. God bless you, and I'm really grateful for the opportunity to serve my community. Please feel free to reach out to me, take the advantage, let us, consult with us, and we are more than happy to help you. God bless you, and thank you so much.